All right. Good morning, everyone. Um, Appreciate that everyone on this call is interested in getting into, beyond the basics, looking at specifically an S corporation, and we'll talk about, generally the do's and don'ts. Generally, this is going to be an overview. First part is going to be an overview of the S corp, and then the second half is going to be actual implementation. So we'll get to that in just a minute here. I've got a handful of people on. Looks like we've got more than 10, which is good. You might just see that it's the presenter and yourself, but there's other folks in the group as well. And what we'll do is if you have questions, there should be a chat box. You can go ahead and put in your question, and we'll look at them at the end. So without further ado here, we're going to kick off S-Corp setup and why your S-Corp can fail. Overview, again, what you should learn is the main things to consider before you set up an S-Corporation and after. So if you already have an S-Corporation, this information will still be relevant to you. It'll be more relevant if you're currently, a sole proprietorship or a single member LLC, and you've read, heard, thought about, what would an S-Corp mean for me? And we'll certainly talk about the benefits and, of course, the administrative burden, which, I'm always telling clients about here. So objective, at the end of the day, you should have a little more context and color to making a decision. If you already have an S corporation, then maybe you'll learn a thing or two about how we advise clients on things like, salary, for example. Just a little bit about us for those that aren't clients or haven't engaged with us. We are a small partnered firm here, a national service covering the sharing economy. Primarily, our clients are mostly made up of Airbnb hosts, both owners, short-term rentals, as well as freelancers. That covers a span of different roles. These are either folks who are creatives or nomads or very high earning 1099 independent contractors such as doctors or computer programmers, as well as our car and ride sharing community. So we've kind of compiled the tax deduction strategies for this niche. But that said, I think that our specialty really is in the intersection between business and individual taxation. And what that ultimately boils down to is pass-through entities. So what we're looking at here is what it looks like to have a business and get taxed at an individual rate. We've been mentioned in a few notable places. You can certainly look us up. So we do have kind of a long-standing history here in the market. Overview about your presenter. I'll be very brief on this. Just a professional background. I worked at PricewaterhouseCoopers for about 6 years, left as a manager and joined Shared Economy to create the consultation or consulting business to what was already a thriving, tax preparation practice. So we're in the realm of advising and kind of making decisions before the year is out. Because as many of you folks know who have used us or other preparers is that, at the end of the year, if we're in April 2019, the things we can do to lower tax liability in 2018 are pretty limited. But the tools we have, now and kind of through the rest of the year, are in some ways, a very large treasure trove of things we can kind of dig into. So we're going to be talking about the aspects of an S corporation, and just one kind of disclaimer is, we're going to go over this generally. Advice is best served specifically. There are exceptions to every general rule, and you might be that exception. So certainly consider getting additional advice or looking into things more specifically before you kind of take and run what we're sharing here. So let's talk about the S corporation. So, kind of the top thing is that The S corporation is an IRS status. It is not a state legal entity. And what I mean by that is that if you want to create an entity, you don't do that at the federal level, you do that at the state level. So, you go to the state, and we'll cover that, and you set up, either an LLC or an S corporation. It can also be a partnership, but typically we're in the LLC and corporation world. And then you have your entity, right? Well, to create an S corporation, you don't do that at the state level, you do that at the federal level. So you take your LLC or corporation and you tell the IRS, hey, I want to be an S corp. And we'll talk about what that request and approval process is like. The big point there is that you have to set up a state entity before getting S corporation treatment. An LLC and an S corporation are both able to file as a S corporation. And the election can be retroactive. So for those of us that after today realize I need to do an S corporation now, well, that is going to be something that you can do retroactively, either back to the beginning of the year, and then we'll go over kind of the time, but even to the beginning of the previous year. And there's a way to do that. And then the biggest takeaway here is going to be that the S corporation benefit is the big benefit is that you will get by on self-employment taxes. So there is a very meaningful tax savings depending on a certain fact pattern. So those are the kind of 50,000 foot overview on the benefits of an S corporation. Requirements for an S corporation. So, is everyone eligible to be an S corporation? And the answer is no. As we said before, you need to have a legal entity in place. You need to have 100 or less shareholders. So for those folks, listening to this, and you want to create the next $1 billion company and raise 5 rounds of investment, an S corporation isn't going to be the right fit for you. And the reason why is, obviously, if you want to raise tons of rounds and you ultimately want to go public, it makes no sense to only have 100 shareholders. For the folks that say, well, I'd never get to 100 anyway, there's 2 of us and we do everything, then that's really where it works. But again, the S stands for small. This is really something that's for the small company. Again, one class of stock. Again, for most of the folks on the call, it's not going to be significant, but preferred, non-preferred, none of that stuff matters with an S corporation. And all the shareholders need to be U.S. citizens or residents. And for those that are currently residents but are running a business that maybe in the future you're going to not be a resident, well, that's something you're going to have to consider, because non-residents are not eligible as shareholders within the S corporation regime. Fourth point, and very important from a tax standpoint, from an accountant standpoint, is you got to pay yourself a salary. So those are payroll; those are subject to payroll taxes. You need to have a W-2 from your business. For those that are used to having an LLC, where you kind of figure it out at the end of the year, do you pay yourself? Do you not? An S corporation, you need to pay yourself. So there are exceptions to this, but generally, if you have an S corporation, the IRS is going to check for employer tax filings. So it's very important that we do that. If you don't have that, that is a definite audit trigger. So if you have an S corporation and you do not salary yourself, please, please, please do. If you need help with that, we can talk about how we can connect kind of after the call. The S corporation tax returns are due March 15th. So you obviously have an annual filing. The 941 for salaried owners are due January 31. So, you've got requirements at the end of the year. So as we round to December, don't just think about, hey, what's my profit at? What can I do? S corporations need to be thinking about, what's the right salary for me? And, do I have the team and the processes in place to make those filings by January 31? And we'll just move on to the next one. So here is kind of a comparison, right? So what's the benefit of an S corporation? And you get a sense here of my perspective: tax, 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 right? So let's just compare the different structures. So C corporation is, the traditional stock corporation that, many public companies take. And the way that works is that the profits of the corporation are taxed at a corporate rate. Now it's 21% with tax reform. And then, right, so if your company on $100 sales makes 50 in income, that 50 gets taxed at 21%, right? So you're losing there. So let's just call it 10. So you've got 40 left, and that 40, when it's paid to you as a distribution, gets taxed as a dividend. So they call that the double tax. It gets taxed twice at the corporate level, and then the remaining gets taxed at your individual rate. So it's going to be a capital gains tax. So not optimal. An LLC pays self-employment tax on all the income. And just to recap on self-employment tax, it is the Medicare, Social Security tax that comes out of your paycheck. So chances are, if you look at your paychecks, you'll see three big chunks taken out: federal income, Social Security, Medicare, and then states for those of you in high tax states: California, New Jersey, New York. But point being that those Social Security, Medicare taxes are pretty big. And when you're self-employed, you basically pay double what you do as a W-2. So you're paying 15% usually on income. So going back to that $50 in income, 15% of that is going to be, somewhere around, 7, 8. And then the remaining, so 7, 8, and then that 50 gets taxed at your federal income tax rate, right? So it's kind of a huge tax when you think about it. If you combine the 15% with your federal income tax rate, which is going to be, I don't know, call it 25, it could be about 40%, right? So again, self-employment tax and federal income tax together suck. It's just getting hit twice. Again, it's not a double tax the way it is with the corporation, but you get hit twice with, two pretty high taxes. Partnership, it's going to work the same way. So what do we do when we kind of want to get around the double taxation and lower the self-employment tax? Well, that's where Congress, in an act of very unique, giving a bone to the small business, created the S corporation. So a big point there is the S corporation is a purposeful, call it, I don't want to call it a loophole. It's an explicit kind of give me to the small businesses, which, in my experience is, it's outdated because it's old, but it's not bad, right? It just happens that it was something that was written into the code decades ago. Have small businesses gotten another cut? Maybe. And, that's probably a talk for another webinar where we talk about what the pass-through deduction is that came into effect in 2018. But really, really important point to drive home is that the S corporation is a give me to small businesses that Congress and lawmakers want to encourage folks to, take on this entity structure. What we're really talking about is we're talking about limiting the self-employment tax and not being subject to double taxation. And we'll go through some examples on what that looks like. So this is one example on 90,000 of net income. So again, this is net income. This is not revenue, right? So revenue here, let's just say it was 200 and there was expenses that got us down to 90, right? So this is a high, or call it, 180 if you want a 50% margin. But the point is that we have a pretty substantial net income that if you look in the table 1, the left-hand column, when you subject 90 of income to self-employment tax, that number there is 12,717. Whopping number, right? And then there's federal income tax, which is another 15. So the total tax on that is 26,810. Effective federal tax rate, 30%. Some of you might think this is crazy. Some of you might think this is low, but the point is this is what it is, right? So again, just going back to it, the self-employment tax, if you look at that line, if you look 4 lines up from the bottom, SE taxes on 90K, 12,717. And that's where we're going to kind of play with the numbers when we look at the S corporation, right? So in the S corporation, the unique thing that we're talking about is wages, right? So I have a general rule for wages that wages should be 1/3 of income, or at least, at very minimum, 10,000 in annual salary. So what we're looking at here is we knew that net income was 90. So we've reverse engineered our wages to 30K, right? So we've got, remember, we had, in the previous example, we had deductions of 90, right? We had 180 in sales. Okay, now we have another deduction of wages for 30. So all we did is we took our business taxable income, we took out 30, we put it in wages, right? So our new business taxable income is 60,000, right? 180 minus 30 minus 90 is 60. So our distribution, right, that business profit is 60, and we've paid ourselves 30 in wages. Okay, but here's the beauty of it. And I hope those are still following, and feel free to type in the chat box if you've lost me, and I can kind of go back to what I missed, and I apologize if I've screwed this up. But the self-employment tax on 30 is now 5K. So we went from 12 down to 5. The federal income tax is 15. Okay? So our total tax is going to be 20K. So it's a net savings of about a little over $6,000. So this is one example of how we get by. But $6,000, to give you some context, I mean, you didn't have to create any additional deductions, right? I mean, for those of you that have worked with us where we've said, look, you've got 1,000 in profit. If you don't want to pay any tax on that, you got to spend another 1,000. And folks usually go, well, what can I buy? Maybe I'll buy a MacBook, but you're going out, you're spending money that's in your bank account. In S corporation, you didn't have to do that. You just changed your election, and now you've not had to write a check to 6,000. If you guys like taxes, you can just write a check to the IRS right now. But 99% of the folks that I've worked with would rather pay what they need to owe based on what the rules are. This is not a trick. This is not doing something cute. This is following the tax code at its finest example. And just kind of the main takeaway here is that Congress created the S corporation to incentivize this structure because they want folks to be salaried, right? They'd rather have someone take it on the chin for the 30 than be in a limbo where they're constantly looking at a huge tax on 90,000 or whatever the number is and figuring out how do I get this number down to 0, right? So this is a way to limit your tax liability with an election. So the next example is similar. This is the question of you guys might be like, well, who cares about 90? What if I only have 20? And you see the same thing here. So again, my rule on wages is 1/3 or 10K. This is a general rule, and it might change based on your industry. I'll go back to kind of the requirement there on reasonable salary, but let's just say that this generally works, and we've done it in audit, right? So this is a major contention that the IRS plays at is, why are your wages what they are? So going down to 10, I will say, is low. It is, potentially aggressive, but what our view is that, look, if your business taxable income is low enough, right? Say that 1/3 is under 10K, like in this case, then, what we're saying is like, look, we didn't have the income, but we're taking it on the chin for some fair amount. And that fair amount is 10,000, right? So I've walked through this with IRS agents before. We've gotten agreements based on this rule of thumb. Obviously, you can't just say, "Hey, I heard it on a webinar." There has to be a lot of rationale behind why it's a good idea. I think it's a great idea. Point is, with 10K in salary, you still see, I'm not going to walk through all the numbers again, but what you still see is you still see a reduction in tax. Again, looking at that self-employment, you're looking at 3K, again, 4 lines from the bottom. If you look on the left-hand column, which is an LLC, you'll see 3K in self-employment taxes. And if you pop over to the right, look at the S corporation column, 4 from the bottom, you'll see that self-employment taxes is 1,413. That isn't a small amount of money. The point is that you'll want to really have an understanding of what your numbers are going to be. So for those folks that haven't decided on an entity, look at what you think you're going to make in 2018 and run a calculation like this. Take a screenshot of this. I'll send out the link. You know, none of this stuff is secret. So, you know, if you want to run these numbers on your own business, by all means, feel free. And if you want help, please reach out, because this is what we do day in and day out, trying to figure out if there's a value. For this individual, that value is a tangible $1,413. That's not chump change. You know, the question is going to be, what's that number going to be over time? Let's keep going on. So caveats, again, we've talked about it. If salary is too low, IRS may disallow the entire, you know, bypass on self-employment of income. So if we go back to the S corporation of the first one, that distribution of 60,000, right? That's not subject to self-employment tax. Well, if the IRS fights you on this, and they do, and there's many documented cases where they've come back and they said your salary is not reasonable, what they're going to do is they're going to go back and assess the self-employment on that full 90. So you might be saying, Miguel, you just told me the big benefit of doing an S corporation is the fact that I'm not subject to self-employment tax. Well, the key is the contingency here is if the salary is reasonable, then you get the bypass. Now, my view is kind of that the IRS kind of attacks this as, you know, in low-hanging fruit. So whatever your salary is that you decide on, make sure you have rationale on it that you would fight tooth and nail to defend. And we certainly believe that if we have some data, you know, comparables, for example, we're able to really go toe to toe and say, look, just look at the national average. For the example I have here in this third bullet point is property manager. If a property manager makes $37,000 a year on average nationally, and I paid myself 40, get out of here. You know, I'm being generous. So, you know, it's a really contentious point. There are a lot of accountants out there who won't touch this, will say, no, you know, an S corporation is too risky. But really what they're saying is we're too lazy to actually do the research and give you a meaningful answer on what an average salary is for your business. The beauty about what we do, and having seen the kind of clients that we see, is we see doctors, we see programmers, engineers who are 1099, as well as Airbnb hosts, and, you know, Turo fleet owners. And we have the data to be able to say, look, this is an average salary, and we have the data. I mean, we have the internal client data, which we can anonymize and show you, you know, what the average return is. So, you know, if you've got the data, by all means, be confident in what your salary number is, but don't be too low. Again, as I was saying before, if you have an S corporation and you're paying 0 in salary and you're getting a bypass on all of the income, then, you know, you're being too aggressive. And, you know, maybe, you know, again, the things with tax is you can always get away with it this year. You can get away with putting whatever you want on your tax return this year, but it's going to come back in 2020, 2021. And are you going to have a good argument to talk about what you're doing 2018 and 2021? Probably not, right? So the idea is just do it right. Just do it right so that in 2021 you say, no, you know what? I know exactly what I had to pay myself, and I did that, and I can take a bypass on the self-employment income. Let's move on. How to set up an S corporation. So this is what I promised you guys. I said, hey, we're going to talk about how to actually do it. So let's actually go through that. Again, choose your legal entity in your state, right? So there are 2 typical entities that do this, right? LLC, taxes, and S corporation. Excuse me, I got to take a glass, drink of water here. So you set up an LLC, you might already have an LLC, and then you ask the IRS, hey, I'd really like to be an S corporation. Can you please let me be one? And there's a form to do that. It's called Form 2553. We'll talk about that in the next slide. And you can also do the same thing with the C corporation. Traditionally, it's been a C corporation. And I can tell you that my lawyer has explained to me why he likes it better. There is a kind of higher, barrier of entry to maintaining corporate requirements. And the, corporate requirements, in hand with the S corporation really kind of defend the structure that, that we want to kind of maintain. Or an LLC, I mean, I'm not sure if the folks on this call are kind of familiar, but when it comes to deductions or when it comes to piercing the corporate veil, the IRS, as well as, creditors, and potential suits have attacked, hey, is the LLC really a business, or is it, kind of a shield, a pretend shield, and, the individual mixes their personal and business transactions. They really just set up an LLC and are just operating like a sole proprietor, in which case creditors can go after you personally, or in the case of the IRS, they can disallow the deductions as business deductions and just say, you know what, we're not giving you any deductions because it doesn't really look like you're operating like a business. It looks like it's personal and business. That's a big risk because the IRS can say, you know what, you're not going to get these. With a corporation, and you know what, let me just caveat here, that doesn't mean that a good LLC can't defend its deductions. It absolutely can. 80% of our clients are in LLC. I love the structure. I've defended it. The key is just to maintain very strict business records, right? So you're going to need to have a separate bank account. You're going to need to have a Okay, here we go. Uh, Sorry for the technical difficulties. We just had to admit a few people into the room. So what I was saying is that for the folks that just joined, I'll be sure to circulate a recording so you can figure out, and listen to kind of the information that was shared previously here. And again, we'll take questions kind of in the chat box if anything comes up. We'll also take questions after the webinar on any information that we didn't cover that you would have liked to have covered. So going back to the slide, I don't know what folks heard last, but let me just say that this section is, we just covered the benefits of the S corporation and kind of the tax advantages of doing that. And now we're covering, how to set up a legal entity into an S corporation, touching on the differences between the LLC and the C corporation. Both can be an S corporation. I've seen both successful and grow large, so no problems at all. I will say, though, that there is a slight advantage to a C corporation structure, in that, and I was saying that my lawyer loves that structure. And the reason why is that the C corporation requires additional levels of compliance. We'll touch on that a little bit, but the point being that sometimes with an LLC, we've seen creditors and the IRS go after that structure, saying that the mixture between business and personal is it's too gray, right? We've seen them say, hey, they use one bank account. It looks like it has personal expenses as well as business. It's got, the kid's Target trip and, vendor expense. Is it really a business? And what the IRS does is they disallow your deductions. And what creditors do is they pierce what's called the corporate veil to be able to go after your personal assets. So, the point being is that if you're an LLC, just operate with discipline. Have things documented, use a business license. When you contract with clients and customers, use your business name. The benefit of a corporation is that in form, it demonstrates that you've gone over additional hurdles to maintain that structure, right? So I will just share that the, the lawyer, and I'm not one, that we work with will typically recommend a C corporation with the S-Corp treatment for that reason. All right, let's talk about state. So with states, it used to be that we saw, when I was first getting in the business, we saw a lot of folks go to Nevada, Wyoming, Delaware. And the reason why is, one is anonymity. You don't have to disclose yourself as the owner. You can literally have a cousin register the company. I'm talking about Wyoming, Nevada specifically. And then, they just have a piece of paper that basically assigns back the responsibility to you as the owner. And, it's anonymous. The other reason is that there are low annual taxes. For those folks that have an entity in California, how much is that a year? If you're thinking 800, that's right. The point being that there are states that have lower fees, and we've seen folks flock to other states for that reason. Why is that a problem? Well, the problem is going back to having that corporate veil and having the liability protection. What we've seen argued in the last 5 years in courts is, our client has a LLC registered in Nevada, but doesn't have status in California where he lives and operates. Well, sorry, it looks like you're operating as an individual in California. It's nice that your entity's in Nevada, but this is a California court. We're not gonna honor that. And that's been a very unfortunate trend. So if you read an article that suggests to go out of state and doesn't tell you to register in your home state as well, be very cautious. So the way to do it is, if you do have a reason to, create an entity in Delaware, for example, which has the advantage of, case law, right? Delaware is very, very, business entity friendly. And the courts there have decided that for, the past, I don't know how many decades, well before my time. So there might be legal reasons to be somewhere, but just make sure that you file what's called a foreign entity status in your state. It doesn't mean that you're foreign to the US. It just means that you're an out-of-state entity that is operating in California. If you look at all the major companies and operated in Delaware, and we've done this for blog posts where we've said, hey, let's look at where Coca-Cola is at. They're obviously in Delaware, but the number of entities that they have in California that have that foreign entity status is just, it's just endless. You'll see a bunch of foreign filings because, what are the big boys doing? They're trying to cover their ass, and we want to make sure that our clients are kind of doing the same thing. So go with home state as a default if there is a legal reason or, an anonymous reason to be in another state. Just make sure that you also get a home state status. Second, articles of organization and incorporation. So for LLCs, you'll file articles of organization with your state. These are pretty simple. For corporations, you'll need to file articles of incorporation. The range of fees goes from $75 to $450. $450 is a Nevada example. $75 is a California example. But beware, California is cheap on the front end, expensive on maintenance. So they know what they're doing. For that college kid who's like, oh, it's only $75 to set up an LLC. You will have a unpleasant surprise when you get an $800 bill, after your first year of operating. Before I do that though, I did want to share a very tangible example of an articles of incorporation. So I'm just going to do a quick share here of a LLC filing for California. So what you'll see here is you'll see a cover letter. This is the LLC filing for California. You can read all the directions. I'm not recommending you don't read the directions. Read the directions, folks. We've got a cover letter here. Very basic information. This is basically just trying to make sure that you can get your documents back once they're filed. Very general comments, right? You don't need to be a lawyer. You don't need to write anything fancy. You don't need to do it on a separate piece of paper. We use a law firm to set up entities when we do it for our company. They don't use a form. They basically type it up on Word because they know all the right things to write. But look, you can set it up just as fine using this form in California. So cover letter, and then what information do you actually need to fill it out? You need the name. This entity has a, this is just a made up entity for those folks wondering. Your business address, so where you actually operate, you need to disclose to California. And then service of process. This is pretty important because this is what becomes public information. So you can be the individual who does the service of process. The kind of catch is that it becomes public record. So, if I say, hey, Miguel, my address in, Manhattan Beach, now my public address is listed on the Secretary of State registry. I don't want that. So what I'd rather use is a registered agent. So for $60 a month, and it sounds like I'm selling it, but I'm not. I'm just saying that if you want to keep some level of anonymity, what you can use is a registered agent who's going to put their information on the filing instead of yours. So again, it's pretty simple. Basically just information. This is 80% of the way filled out. LLC managed by one member, more than one manager. All LLC members. I mean, this isn't significant. Usually we have one manager and then the rest are members. It can also be managed by all LLC members. Not a conversation for your tax guy, but I typically see one manager. You sign it. The address to mail it, you do have to mail it. California does not do online filings. Other states do. Nevada does. And the address should be here. Again, this is a $70 fee. There's a $5 certification fee. I recommend doing that. So there you go. Just in 5 minutes, that's how you would file your articles for your LLC. Going back to our presentation here, we've talked about the required information. Again, I personally prefer to go with a registered agent just to protect information. But again, it's up to you. You certainly don't do that. If you're not worried about, folks knowing your address, then it's perfectly fine. So operating agreements, this is kind of an important point. Going back to the corporate veil, you need to have some documentation that states who the members are, how you operate. For an LLC, it's a little less formal than for a corporation, right? So it's going back to, the hurdles you got to jump through, the hoops you got to jump through for a corporation are going to be higher. For an LLC, it's usually one operating agreement that we deal with. Again, if there's lawyers on the call or if you talk to my lawyer, he'll make it sound more complicated, but the truth is, it's really not. For corporations, you need a good list of things. Don't consider this complete at all, but you will at least need bylaws, so it kind of states how the company runs. You'll need minutes, meaning that these are the major decisions that happen. You need minutes, and this seems kind of odd to folks, but if you're doing the C corporation route, you do need, I recommend quarterly or at least, biannual board meetings. And you might think this is funky because it's just going to be yourself, and maybe you put your kid as your, treasury. But you've got to document kind of the major decisions that are made, and state you've kind of maintained the same officers. And then statements showing stock issuance, right? So who owns the company? The company, again, it seems like we're I know that when I first started my company, it seemed like I was playing pretend, that I was issuing myself 1 million shares worth nothing. But again, these are requirements of corporations. Okay, so S-Corp election. So, what I want to kind of ping back to is the S corporation really right for you? You like the idea of saving on the Sorry again. Okay, so going back to that, sorry about that. So you like the idea of saving on the S corporation, and I just got a message saying my voice keeps cutting in and out. I apologize for that. I think we're in the home stretch. So let's just finish out here. So the S corporation, is it right for you? It's really, I think, a question of projections. If you're going to consistently make, back to that $20,000 example, is a $10,000 salary reasonable? It is if you don't hit the profits, right? The rationale being, hey, we only made 20. Now, if you do that year in and year out, I think eventually the reasonable salary can become an issue. Meaning, if you're a computer programmer and you have an S corporation that makes, 40,000 in revenue every year, at some point you might get a challenge saying that, look, the average salary for a computer programmer in your area is 100,000. So you know what? That 40,000 in revenue, maybe we'll give you 10,000 in deductions, but we're really gonna tax as salary everything that you make from this company, right? In which case, why did you do an S corporation? So the point is that you want to be able to clear that hurdle of being able to get to the minimum salary. Again, if the minimum salary is going to be 37, then and you net 40, then is there really a huge value in doing an S corporation? Maybe not. Maybe not. If you clear 35 and you've got to salary yourself 37, well, again, it's nice that you have an S corporation, but it's not great. So I think, it's pretty important to figure out whether it's right for you. And, last but not least, the S corporation election itself. I'll go ahead and share what that looks like here. It's pretty straightforward. It's a 2-page process. I should be sharing the 2553. And again, here you're going to put the entity information. Okay. This stuff is pretty straightforward. Name of your entity, employer, your EIN, your street where you're at, date of incorporation. You can kind of read through this. The big item, I think, is going to be your year end. 90% of clients are going to be on calendar year. You would only elect a fiscal year if for some reason you want to, if you're, a retailer, maybe your fiscal year ends in January, but it's not really significant for this purpose of this call. Again, your shareholders, you're going to have to disclose. And then the big thing here is on timing. So if you want retroactive treatment as an S corporation, you're going to have to tell the IRS why you think you should get it. The timeline, going back to my other screen, is 2.5 months basically. So for most calendar year filers, if you want, so it's 2018 right now, technically if you want to be an S corporation for 2018, it's too late. You should have filed it by Valentine's Day. And I'm not kidding, that's how I remember that. But if you want to get retroactive treatment, then you're going to have to explain why that makes sense. And it can go back up to 3 years. Have I seen this done? Yes. I mean, I've seen success in, 9 out of 10 cases in trying to get retroactive treatment back 1 year, 2 years. This is a boilerplate template of what I'll say. So feel free to take a screenshot here. Use that. If it doesn't work, let me know. But, again, this is general advice. Your specifics may be different. But again, I mean, the IRS is looking for reasonable cause on, maybe why you didn't file. In this example, I'm saying, hey, I didn't know if I'd have a business, so why would I file an S corporation if I was failing? But, I've had some success and now it looks like an S corp makes sense for me. So questions. So here we are at questions. This is a time where Sean should be on the line. Sean, I don't know if you're getting any questions here.
There we go. Not quite. Michelle asked if there's going to be a recording sent out.
Okay. Yeah, so there'll be a recording. We'll send that out. So let's see here. Okay. So if you have questions, feel free to send those over to us. Just as a part of how we work, we have a consultation program that we do with clients called the On-Ramp. For a limited time, that on-ramp is a projections analysis, which you can get more information about, where we're calculating out what the tax liability is for the year, what that tax rate is at your personal rate. Also, it is looking at 2018 rates, so any changes that have happened throughout that, tax reform are incorporated into this. And then the question is, what scenarios work for you? Usually what we do is we scenario a LLC versus S corporation. What you could pay in taxes, kind of where you're at. And if we recommend an S corporation at the end of the process. Sorry, everyone. I will have to get a better internet connection the next time we do this. So what I was saying is, just wrapping up, we have an on-ramp program where we are basically projecting out income, looking at scenarios. Does an S corp make sense for you? And then we usually recommend an entity and kind of leave that to the client to decide how to do that. What we're going to start doing kind of for a limited time here is we're going to do the entity filing process along with that program to kind of walk you through how to get that S corporation as a part of that on-ramp. So if you're interested, feel free to shoot an email out to Sean or myself. You can send me an email, Miguel@sharedeconomycpa.com. Sean is 1,000 times more responsive than I am because I'm so focused on putting out fires these days. So please, please, please reach out. Please give us feedback. We're going to post this on our various channels. And, if you can give us feedback, that'd be fantastic. As I kind of shared, this is kind of the dry run for figuring out, what the best format is, whether this information is useful at all. It looks like most of the folks that started at the beginning of the call are still on. Whether or not you guys are listening or not, that's kind of up to you, but I certainly appreciate everyone's time this morning, going over some, pretty technical information, and certainly hope this is of value to you. So let's connect. Let's regroup on this. Feel free to shoot me a note, and we can kind of connect on, whether it makes sense to work together. If you have a quick question, feel free to email it over to Sean, and we'll try to get you back a pretty good response. So again, everyone, thanks for your time. Appreciate you. Have a good rest of your day.